Good evening, friends. So, today we are going to deal with one of the most popular stock, Ashok Leyland. And the topic is why Ashok Leyland price is falling. So, first of all, let's look at the positive point of this stock, and then we will see, even after a good fundamentals, why this stock price is continuously falling. So, here are some pros or positive points about the Ashok Leyland. Now, if you look at the compounded sales growth for the last 5 years, it is at 16%, which is a very good sign of a good company. Then, if you look at the compounded profit growth for last 5 years, it is 56%, and this is a very good number as it should be more than 20 to 30%, but it is 56%. And if you look at the return over equity or return on equity for the last 5 years, it is 14.71%, which is also a robust number, which is also very good return for the last 5 years. Now, EPS, earning per share, if you compare the last 2 quarters, so as of now, we have the result for September quarter. And in September quarter, as compared to June quarter, EPS has also got increase. If you look at the net profit in September quarter, it has also got increased as compared to June quarter. And if you look at the revenue also got increased in September quarter as compared to June quarter. So instead of having such a good fundamentals, why the stock price is falling? So there can be n number of reasons, but what I found is that there was a one news in August 2018 about new Excel norms by the government, and that has created the problem for this stock. Now, what are the norms, new Excel norms? Now, Excel norms are for heavy vehicles. So, Ashok Leyland dealing with trucks, it comes under heavy vehicles. And because of that, the government has brought in the new Excel norms for heavy vehicles. And according to new Excel norms, the government has increased the load carrying capacity of all the vehicles by 20 to 25%. So, what we can say is that, and to carry 20 to 25% more weight, the heavy vehicle should also increase its weight. So, it means now to make a same heavy vehicle, it would require more capital, as well as in coming future the sales of such vehicles are going to decrease because the same truck which was carrying 100 kg is now carrying 120 to 125 kg of weight, and that's why number of vehicles required would be less, and that's why in the coming months or coming years the vehicles sales of these vehicles would decrease, and that would cause problem not only to industry but also to the government. Now, because of this, there will be a loss of rupees 9,000 crore to the industry as such. And because of that only, if you look at the technicals of the stock is exactly falling from the September. So let's go to charting and let's see what is the technical problem in this stock. So this one is the fundamental problem that the in coming months or coming years the sale of these vehicles is going to fall. So let's go to charting. So in charting, if you go to Ashok Leyland and if you open the recent chart, Now you can see from here, so I will mark over here. This is the candle from where there is a steep fall in Ashok Leyland's price. And if you look at the date of this candle, it was 4th September 2018. So from 4th September, its steep fall has started. The stock has started falling steeply, and the best point about this is that the 200-day moving average, this black line is 200-day moving average. It is acting as a resistance over here. So if any stock, in any stock, if 200 DMA is acting as a resistance, then there would be a great fall in that stock, and that has happened over here. Not only that, the stock at present is at 82 rupees 60 paise, and it is trading below all important averages. So it is indicating that stock is bearish. And if you look at the chart, we can also see that the high price it has made was during the month of May 2018, and it made high of around 165 rupees. So from 165 to 82, near about 50% fall is there. So this stock has fallen 50%. Now the real question comes. So real question comes whether should we buy this stock? But to be frank, even if it is a fundamentally good stock, it is not satisfying the technical criteria that for investing in any stock for long term, the stock should trade above 200 DMA, that is 200 daily moving average, and stock should not be a 52-week low. As of now, the stock is 52-week low. And another thing, if you can watch, is that P of the stock is same as the P of the industry. It means the price at which it is available is also not that much reasonable. Thank you. Kindly